Hey, good afternoon, everybody. We're going to go over our Forex trades for today, January 14th, Wednesday. Finally had some action. There was really no economic news from Sunday night until um, really nothing until Tuesday night. So finally, with the news from Tuesday evening from Japan, we had some retail sales numbers here in the States this morning. We had Carney from the Bank of England speaking this morning as well. So finally had some news coming out to shake things up a little bit. Um, totally paid off. We had two trades, pulled out 17.3 pips on a size adjusted basis because we had about 30% of our normal size. You'll see that all here in the information. These trades were announced several hours, some of them many hours prior to taking the actual position. So our traders had plenty of time to get in. We announced when we got out, so they had plenty of time to get out. And some of you guys could have done a lot better. Probably did a lot better than us. Even if matter if you, especially on the second trade, you're going to see here in U.S. dollar Japanese yen in a minute. A matter of 20 minutes, maybe even less than that, you would have done a lot better than we did. But we'll go over them here in a second. Retail sales, I just wanted to talk about that real quick. Retail sales came out this morning, was horrible for the month of December. Surprisingly horrible considering it was all the holidays and everyone shopping and whatnot. Hearing a myriad of excuses from analysts on Wall Street and the talking heads on TV, everything from they did their shopping in November when the sales first came to it's proving the theory that the people that have extra money in their pockets from spending less on gasoline, since oil has come down so much, that they're not spending and that they're saving it. We disagree with both of those excuses. We know the average American is not going to save the extra money that they have in their pockets from not paying so much at the pump anymore. That money's going to be spent. They're not going to even realize it. They may realize that they're saving money, obviously, because they drive past the gas stations every day. They fill up their tanks maybe once or twice a week. So they're gonna know and they're gonna see it. But that money's not. They're not gonna put it aside in their bank account. That money's gonna be spent. And as far as the holiday shopping was done in November when the sales first came about, we really have to disagree with that as well. The poor retail sales is a byproduct of the poor economy. So many people are out of work, and the government keeps saying that unemployment's coming down, and we all know that's a fallacy. Labor participation rates at 38-year lows. So the government is people that can no longer eligible for unemployment benefits. The government is just segueing them into retirement. So you have whatever 40-year-olds, 35-year-olds, 50-year-olds, these people that can't get a job, no longer allowed to receive unemployment because their benefits have run out, still can't find work. Maybe they're working part-time jobs, which isn't calculated by the government or included by the government. So the government says they segued into retirement. I mean, how many 40-year-olds, how many 35, how many 38-year, how many 50-year-olds, can just easily retire? So I guess the government's saying they either had enough money saved up to retire, they hit the lottery, or they inherited a bunch of money from a rich uncle or someone in their family. And so we all know that's a bunch of BS. So the government schmoozing the numbers to look good, but yet real data comes out like retail sales. You can't smudge those numbers. Well, I guess you could, but the retail sales is going to be what they are, and they're going to be reported by the big firms out there. Unless they start doing funny things with their numbers and their sales and their inventory, maybe it's a little different ballgame. But as of right now, we just don't see the economy being as rosy. And this is one of the data points, retail sales, that's proving us correct, at least at this moment in time. Anyway, so let's go over to trades. First trade you're looking at here is pound to yen. We got short this, a signal short this 178.328. Went against us a little bit, about 40, maybe 50 pips at most. Again, we're about 30% of our normal size, so we're risking actually above the 180 mark. So it was no big deal to have it go against you a little. Finally started to break down last evening. We wanted to get out. We're not a fan of the figures, so 178 is a figure. If it had broken down earlier, we could have started to piece out of this thing, but it was getting so late in the evening, we wanted to shut down for the night. So we took it all off right around that figure. picked up 33.2 pips, or size adjusted 9.9. And you can see what it did. Once it got through the figure, it stayed here. This is a 30-minute chart, I believe it is. Yes, 30-minute chart. So it stayed here for a couple hours, maybe 2.5 hours. Finally broke down, and broke down hard. There's another 100 pips there, down to the figure of 177. And you can see here, it has, we say we don't like figures just because they're psychological levels. Here you go. This time the figure held. I mean, the figure of 178 held for a few hours. This figure has held for almost 12 hours now, 10 hours so far. So, but hopefully you guys captured a little bit more than us. This was the trade that we left a lot on the table. We were short this US dollar Japanese yen, 116.784. This happened overnight while we were in snoozing land, but we got filled. And we had our stops in place, again, about 30% of our normal size. Our stops were, if I remember correctly, above the 118 level. So it really never, obviously, you can see here, really never went against us by all that much. Came in the office this morning. We were down about 15 pips. Not a big deal, maybe 20 pips. Yeah, right around 20 pips. And then it finally started to break down when the retail, just as the retail sales numbers were coming out. So it was an indication they were going to be bad. It started to break down about a minute or so prior to it, maybe 2 minutes. And then once they came out, it really started to break down. We had this bottom that was put in place earlier in the evening, around 3 or 4 in the morning, when we were, again, sleeping. So that was one of the reasons why we were looking to cover. In hindsight, we probably should have pieced out of this. But on the flip side, you get sometimes you get these volatile moves from an economic data, and they bounce real quick. Here's one back here. I believe this was an economic data last week. It just busted up and fell right back down. So we didn't want to get caught in something like that, something where it breaks down and shoots right back up. Maybe this was, for example, it could have came down to where my mouse has stopped and bounced hard. So you may not even have time if you're trying to piece it out. So we took it all off. 24.5 pips, picked up 7.4 size adjusted. Again, if a matter of 10 or 15 or 20 minutes, if you held, it came all the way down close to the figure. Again, here's that figure, 116. It traded as low as about 116.08. So here it is. This is another proof of the figures, how we don't like them, and it would have stopped. It would have held. But again, if you waited 15, 20 minutes after we got out and we announced we were out, this thing came right down. You could have covered anywhere in here and done a lot better than us. But the end result, we'll take it. 2 trades, up 17.3 pips for the day. We're in cash. We have no open orders. We had a couple other open orders which we canceled this morning. So now we're just waiting to see if we get any signals from the algorithm, and we'll move on till later this evening and tomorrow. If you're still trading now, good luck, and we'll be back with a video tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.